cost pressure here, both from wages, from not being able to hire as many people as they want, and interestingly, even from things like steel.
Yeah. Net, they missed 3Q and they guided lower for 4Q. And 3Q, they missed revenue by about 1%. They missed operating income by about 12%. And David, to your point, they saw inflationary pressures, given wages, given steel, like they called out, as they're doing this historic fulfillment build out. And then 4Q. They missed top line small, but then they really did miss their guide for op income, $0 to $3 billion. We were at about $7.5 billion, as was sell side consensus. I felt like investors were probably, kind of like $5 to $6.5 billion. So it was a clear miss. And they called out $6 billion in incremental cost. And like you said, labor was about $2 billion of it. Their network inefficiency is about $2 billion. They have $1 billion in kind of media investments, and then $1 billion in fixed cost deleverage. So, that led to the miss, and stocks down a bit today.
Yeah. All right. So let's break that down a bit. Again, that Q4 guidance you're talking about anticipates costs that we were just talking about, $4 billion in Q4, which does take that guidance way down. And we see Andy Jassy talking about it as well, with labor supply shortages, increased wages. Is it a one-time thing? Do they get over it? Are they going to recover in the second half of 2022?
Yeah, I think so. Yeah, some of it will leak into 22. We brought down our 22 operating income by about $6 billion. Those labor costs will run definitely through the uncomped in the first half of 22, and then you'll start to comp them in 3Q. Some of it, the inefficiencies, they'll pick up, and the media investment, you're not going to have that necessarily recurring. So I think there's positives on the horizon for 22. We are looking for margin expansion in 22, as I just kind of am talking about. But then we're also going to see revenue reaccelerate, and that's when Amazon stock, really works. Starting in 2Q22, we'll see the revenue accelerate. And I'd also say that, they called out last night that their fulfillment capacity doubled the last 2 years, which is like crazy. And so I think the same day offering, Prime one-day offering, will be better next year, and that could help purchase conversion and really be another revenue growth driver. And the other thing I would call out, they didn't commit to it last night, but we're likely near the end of this historic fulfillment investment cycle. That could also help margin next year.
Yeah, I mean, that fulfillment stat, the doubling since the start of the pandemic is bananas. That got my attention as well. The current quarter guidance of break even to a $3 billion profit, I mean, it's such and I realize that they give these wide numbers, these wide ranges. But are you on board with that, or do you expect that this is a company that's probably going to lose money, given the fact that it does have to spend so much in the near term?
Yeah, I mean, we went to $3 billion. I think they'll do something around there. I mean, it's interesting because some of the bright spots. AWS accelerated third quarter in a row. Ad business growing 50%, not in the crosshairs of Apple. And so when you roll that forward into the fourth quarter, if you the rest of the business outside of AWS and advertising is losing about $6 billion. But no, I think they'll come in, mildly positive, but they definitely have headwinds as we're talking about.